Ladies and gentlemen of the crypto space, we're live on a Monday, January 17th at 11:35 a.m. We are on target today, and my young little creature has come in to say hi. What a way to start a show, boys and girls. I'll be right back. How about that? Papa Bear got a haircut too. Don't look at the top part, look at the sides. It's nice and smooth. I feel young again. All right. It's all about macro right about now. So the entire market is basically trending horizontal. We haven't had any liquidity issues where people are wholesale liquidating the equities market or the crypto space. We see normal volatility for the crypto space. We see some liquidations and just evacuation of the high risk assets. And what do I always say? That leads to concentration into the assets that are reflective or representative of core narratives, the shit, the tech, the crazy stuff in the crypto space that actually means something. It mirrors legacy financials, it provides disintermediated access to financial services that historically were only reserved for Illuminati scale corporations and wealthy persons. So this is the focus that I like to think of when we go into 2022, and clearly we're going to start the stream looking at macro because that gives us a sense of where we are in the market, where the capital is flowing, why it's flowing there, and why there's a lull. There's nothing going on in the market. So we have our long-term time horizons, but it's always good to know what's going on in short term. Let's dig into some macro charts. Let's get a sense of how folks are thinking about potentially short-term bearishness, and I'll give you my input on my plan of action for at least this heading into 2022 to get to where I know it's going to head. Bottom line, let's pop it over to the main screen, see who's in the stream. We got S&P futures up on the screen. It looks like dog poo poo. Hello, dog poo poo. So back in the end of 2020, we find ourselves in a very similar candlestick pattern on the monthly chart with a hanging man. It's obviously worse right about now. This wasn't a bearish engulfing; it was a hanging man candle. And let's see if we see an inverted hammer. Clearly, this spoke for itself. But bear in mind, 1 to 3 months of what's going on in the markets for it to play out. Um, that's serious. Like literally, 3 candles is 3 months. So we're on month one of a hanging man. Maybe we see just a sideways candle. Maybe it trends horizontally. Maybe we see a spinning top, and maybe we see an inverted hammer, and maybe we see a lower low, and some sort of bearishness actually come to this market. Because as you can see in this chart, where's the bearishness? There's no bearishness. So that's what the legacy equities market has been reduced to, a market of where the hell else are you going to put your money? Well, we know better. These boys are crowding the tech equities, and we're crowding tech also. We're just crowding tech that actually means something. I mean, what are you crowding into Apple? What the fuck are they going to do for the goddamn country? They're going to print some iPhones? Everyone needs a new iPhone. That's some bullshit. That's some baby back bullshit right there. There's nothing exciting or innovative going on in tech. Now, sure, don't get me wrong, electrification is a big deal. Tesla is very interesting, but their valuation is just rich. That's some of that, pure cocoa dark chocolate rich type stuff right there. It's because nobody knows where else to put their money. The street is full of mental mush. Anyway, I don't want to talk down. I want to talk up. I want to talk positive about the exciting things that we see with regard to tech. That's at the crossroads of tech and financials and liberty with regard to money because you got disintermediated access to financial services. Let's hit the rest of macro. Dollars holding on the 50 SMA on the monthly. Dollar bullishness tends to be, well, dollar bullishness coinciding with yields up is very indicative of bonds being liquidated for purposes of they need the capital. They're liquidating the collateral for the capital. They're buying dollars because they got to service debt. So what do we see right about now? If we go over to the 10-year, yeah, bonds are up. Hitting the 50 SMA on the monthly. Notice I really only look at monthly charts nowadays. I don't have time for this short term waste of time. So yields up, dollar holding support on a heck of, on a moving average. I mean, a 50 SMA, it's a weaker of the moving averages, but it's above the 100 SMA. And, this is not the most bullish of setups, particularly because if you have a 100 SMA cross of a 50 SMA, that's not necessarily the most. That's it's a weakening type of moving average cross. If the fifth, if you see a nice rip up to 70, 80, 90, no, then the 50 SMA is going to stay above the 100 SMA, and that's very indicative of bullishness. Dollar up is going to be destructive of foreign fiat purchasing power, the relative value, so to speak. And in that instance, if we see a large move up in the dollar coinciding with the liquidation of bonds, now that's like Stephen Van Meter's territory of potentially trying to sniff out a liquidity event, which really would take the gas out of just the entire risk-on market, equities markets, as well as the crypto space alike. But all things point to relative uh, calmness in the markets. Yeah, there's bearish overtones or weakishness with regard to continued appreciation, but we're not seeing signs necessarily of a liquidity event. No, like this in 14, that's a heck of a rip to the upside on the monthly. That's pretty bad for collateral shortfall, and the only reason you're buying dollars like that is to service debt. So there was a problem with debt servicing capital. All right, so that was the S&P, that was the dollar, that was bonds. That's the macro outlook for right about now. Seems calm. It seems to be on the wrong side of the moving averages, where there's pressure for the dollar to go up or support for the dollar to go up, and then I mean, technically, what we're at with regard to bonds. Final thought on macro is that we're at resistance. Um, Market's going to shit itself if it pushes through the 50 SMA up towards 2% on the 100 SMA. If the bond yields 10-year push above the 100 SMA above 2%, it's going to be full on a little bit of mania. People are going to start freaking out. You get towards the 200 SMA and you're getting into a sovereign debt issue where GDP is not adequate to service the debt obligations. So this is getting dicey. But point that's meaningful, most meaningful, is that we're below resistance. Now it's a little scary, the trend formation. Clearly, we have a cup and handle as well as a decent inverted head and shoulders above the 50 SMA. So it's a pinch, 10 SMA, where it's a pinch between the 10 SMA and the 50 SMA. You breach the 50 SMA, that's where all eyes are, in my opinion. If this thing rips through and dollars push up off of the 50 SMA, it's not going to be a pretty sight. But doesn't mean anything to me. I know where my capital is. I know where it belongs. I don't need any of it. And I sure as hell, I'm not going to pay protection fees just so I could access it. I don't need it. That's why I work. I have income. So, protection fees meaning taxes, by the way. Dan's in the house. Liv W. Good morning. Lewis, my man. Dan, do you think DopeX versus GMX will have more market share in medium to long term? I got no idea, my friend. DopeX has got Tetra, and GMX has a good part of a lot of solid capital allocators that are very much incomers as well. Um, Both are strong. I have no interest really in both of them. I was very tempted for GMX for a bit because it produces significant cash flow, but then my mindset headed more so down the road of cross-chain interop, seamless cross-chain interop, which was a core narrative of 2022. And bam, we saw a very big reveal last week that really put a particular asset on my radar, which has now taken number 4 spot as a core position. Guys, it is very rare for me to take on a core position. I don't adjust the core portfolio, but in this instance, that I've seen enough confluence to suggest the core portfolio adjustment was warranted. Spell wasn't a core portfolio position. It was literally a 1% play that grew into an entire core position. Between my daughter and my dog. Can't catch a break today. Be right back. Okay. Okay. So that's the core portfolio. Curve is clearly still the strongest position in the portfolio. It does what it does. It's the MMT money producer of the crypto space. It could get hit really hard. Everything could get hit really hard. But what we have to do is zoom out and look at things on the weekly and the monthly. Let's go out to the monthly. I've got no time for the weekly nowadays. This top green line right there at $4.93. That is of great. $4.65. We're at 4.93. I'd like to see in 2 weeks it hold above that green line right there because we've been pushing above this historic resistance for 1, 2, 3, and now a 4th month above it, and we held it last month. Technically, we held it the month before as well, albeit we started below it. The candle body opened below it. The candle body did not open below it the last month and this month. If we close above this green line, that's wonderful. But you got to check back in 2 weeks. I got no time for this daily, this hourly stuff that people are looking at, and I don't really care much for the weekly nowadays anymore either. But look at this directionality. We're above the 10 SMA and the TWAP on the monthly. You don't have the other moving averages. It's a relatively new asset. You see the long-term moving averages on the monthly when you're talking about years of chart history. We don't have that. But the pitchfork is clearly depictive of the directionality of the asset. We get above 570, and that's a heck of a price point. There's nothing in the technicals between 570 and 23. So it's uncharted territory. And that's the reason this warrants the position size that it has. And as I've always said, I remind you guys, these position sizes didn't start where they are. Grow a portfolio, don't create a portfolio. These are very important lessons to always consider. And I remind you again, I'm looking at the damn monthly chart. I got no time for them short-term trades. So this is convex. Convex is a minor position in the portfolio. It's not trivial. So I'll give you the percentage. 4.96. We got 5% for a convex position. I mean, it just prints a huge amount of capital, but that's just another story. You all know that. That's why it's such a hot asset on our radars nowadays. So on the weekly, you can't really look at it on the monthly. It's much newer than Curve, and it's not worth it to look on the monthly. So what do we got? We got higher highs and higher lows above the TWAP. And look at the directionality of the pitchfork. That's it. That's the deal. Let's see some bearishness. What do they got? They're going to take half our portfolio? Okay. Did we start at that size at the beginning of the year or last year? What matters is year over year, period. Malik's in the house. We can do better. That's right. Eduardo, Captain Rational, Live W, Dan. They'll be working together, but they are different protocols. Yeah, of course they are. Everyone works together. Not everyone tightly work together, but what they're working on conceptually, options is meaningful. We've got everything that Danny's working on between Popsicle and what the hell is going to come from the sushi consortium, conglomerate, so on and so forth. So there's a whole lot of stuff that's going to come out in 2022. What you got to focus on time horizon of these positions. It takes a huge amount of work and effort to get a software deployment. And, it's massive. It's complicated, sophisticated. There's security involved. There's money involved. So it's better for it to be slow. So I'm looking forward to significant progress on sushi towards the end of the year, maybe Q4. 2022, Q1 2023, and Popsicle probably the same time frame. I look forward to Q4 2022 and Q1 2023. That's where I see those assets maturing and developing and pushing stuff out. Because in the short term, I think other things are going to take precedence. I think seamless cross chain is just on the precipice. It's on the threshold of unleashing some serious technology on the crypto space that's going to seriously facilitate cash flow and juice the crap out of monetary velocity. So I'm very excited for that. Roberto, hello. Hilda's in the house. Always a pleasure. Victor, hey Noah, glad to hear your thought as always. I'm happy to share my thoughts. Liv W, no hat today. What the? Yeah. Change of pace. It's all good. And a new haircut. Fresh and so clean. Grip guy in the house, a pleasure. Tyler, hello Noah. I usually like to focus on positivity and optimism, but do you have an opinion on? I have no idea who the heck those people are. Yeah, there's plenty of opinion. There's plenty of reasons to have fear. There's plenty of reasons to expect this shit to go down. But that has nothing to do with the technology. So there's a big difference between the irrational crap that people talked about in 2017, where diamond hands, hodl, in it for the technology. Holy crap, these are disintermediated financial services. You got cash flow, you got monetary velocity, you got income streams. Where the heck is the capital going to go? So I told you guys about the equity space. That's why all the normies in the equities market, they're like, where are we going to put our capital? I'm going to buy Tesla. I'm going to buy Apple. That's why the capital went there. Where the hell is capital going to go leaving the crypto space when you got 20% on stables? Oh, dare they get diluted to 3, 4, 5%. You going to buy a bond? Then you're going to get negative, or not negative, but you can get 1, 2%. I don't think 10 years to get into 3%, the whole market will implode. When you could get 3, 4, 5% in worst case conditions, probably on dollar stables, capital's not going to leave. Capital doesn't abandon monetary velocity. Monetary velocity could get depressed, but the capital is going to stay where the opportunity is. And this is the space where this is the last space of where real opportunity is, in my opinion. And this is real cash flow. And this is, I see very much the case for bearish conditions, but that doesn't mean anything for me with regard to a long-term perspective on these markets. Assume, good morning. Roberto, 3 dips highly relative to COVID news. Yeah, the whole market's correlated to whatever mainstream media is pumping out nowadays. Daniel, hey Noah, can you compare osmosis to SIF chain? I don't know much about SIF chain, but what are these Cosmos hubs? I mean, there's going to be a whole explosion of financial services on Cosmos hubs. The only thing, there's a couple of things on Cosmos hubs that catch my fancy. I have a legacy Atom position. It's legacy. It's not. I mean, it does produce cash flow, but it's all inflationary. I have an osmosis position because that was just given to us. It was a massive, massive airdrop. And I have, well, I guess I have a bunch. I have some band, trivial, like 0.01%. Kava, 0.001%. And a decent position in IrisNet. It's still like 0.1%. It's a micro position. But IrisNet's the one integrated into the BSN. It's not Cosmos or Atom that's integrated into the BSN. It's IrisNet. So I'm very interested in the Cosmos Hub ecosystem as it evolves over the coming years. It is not a short-term time horizon play. It is not critical mass imminent. Check back at the end of next year during the Olympics when China rolls out their CBDC. Because, yeah, China's rolling out their CBDC and they're going to hit it hard. And who the hell do you think integrates everything into the blockchain ecosystem? The BSN. Just Google the BSN. You're going to see their offices They're crazy, and they got all the chains integrated, and it's run by the Chinese government. China is full on blockchain from a business standpoint, from a technology and services standpoint. And who's integrated is IrisNet. I mean, they're all integrated. Ethereum, the Nears gained a lot of popularity, probably because it was integrated into the BSN. I mean, the BSN is basically a big deal because where do you think China said 10% of their GDP is going to run through uh, blockchain crypto tech by 2025, I think they said. That's crazy. And I'd like a piece of that. I'm just saying. Robert, a pleasure. Um, Patrick, when's the last time you were actually really concerned for your crypto portfolio? Well, never, because I don't care about the crypto portfolio. I this is not a statement of in it for the tech. This is a statement of how I manage my financials. I never needed any of the capital that I deployed to the crypto space. It was all part of like retirement savings or something. And thus far, it has grown into what it has grown into. So I make my income from work. It pays my bills. It pays everything. And I can take care of myself. I cover my overhead. So what I think of when I think of the crypto portfolio is where do I want my capital for the next 5, 10, 15 years? Where do I see the markets in the next 5, 10, 15 years? And I only see the capital flowing into this space over the next 5, 10, 15 years. So in hindsight, I would have been the schmuck who bought Bitcoin at 20 grand and held it until where it is today and then be holding it into the next 5 years. Albeit nowadays I see Bitcoin as just enormous opportunity cost. But with my current ideology, I'm the guy who holds through bear markets. I'm not the guy who liquidates and experiences protection payment requirements, tax payments. I'm the guy who holds it. And that's not naive. That's not irrational. That's I don't want to trade. I don't want to pay those taxes. I know where the market's going to be in a couple years. I know see the directionality of the market in the charts, and I'm here. This is where I am, and along the way, I'll tell the story, and that's the path I choose as the path I want to take, and I'm content with that. And if I make less money, I make less money. Goodness gracious, it's not all about money. And I say again, this is not in it for the tech statement, because I'm sure as hell in it for the money, but this is my strategy. This is my mentality. This is my approach. This is how I feel most comfortable engaging with this market. I don't want to feel like, oh, I got to sell. I'm going to lose unrealized capital gains. I don't feel that. I don't want to feel that. I don't want to think about these markets like that. This is the stuff I want to own. I got a significant piece of curve, a significant piece of spell, significant piece of frax, and now multi. And that makes me content because now I have stories to tell about these assets. Alpha, nice haircut. Thank you very much. Eduardo, what app do you use to organize tabs? This is just Chrome. Well, this is Brave, but Brave has built-in tabs nowadays. Vitalik will be on up only. Very cool. The Apple Mix, my man. Daniel, I'm up nearly 2x on osmosis. Would you sell and rotate into another DEX with double the APR at 300%? That's a subjective opinion, my friend. Only you can make that choice. Logan Parker, thoughts on Llama Air Force, the union that auto compounds you lock CVX rewards. Lovely. I go on Votium. I vote. I just engage with Convex and Vodium and, even the bribes because I have an old school VECRV position. So I get V curve bribes and I just do it manually. I don't know. I get like, that's down now, but that's nice and not something to complain about. Let's take a look at some other charts. I'll keep some more comments going. Shabby, a pleasure, a pleasure. Definitely a pleasure. Quantified. When we think of cross-chain interop, is that a bucket you would place quant? Yes, but there's nothing to the monetary policy. It's a protocol that's extremely powerful, that's going to be integrated with governments, and that has price go up written all over it. But there's no way to monetize or capitalize on the appreciation and adoption of the protocol with the tokenomics. So I don't. Maybe there is. Maybe there's nodes that I don't fully understand. It's just not something that I focused on. I mean, Andre just has such a presence, and Quan has overtones of government interaction, and that's massive, massive stuff. A lot of choosing what you want to look at is subjective. It's your opinion. It's how you feel. And they just never took a Quan position, and that's okay. I tell you guys all the time, you can't own everything you want to own. You, you can't. It just doesn't work. So it's okay to not own something. I got no e-gold. I don't have any Elrond position. It is what it is. I've always said that about that damn asset. I think it's pretty cool. Like Elrond is just awesome compared to like Cardano, which is nothing yet. Maybe it becomes something, but Elrond's pretty cool. Anyway, Aave V3 LibW is pretty cool. It's pretty cool. I juiced my Aave position a little bit. Currently sitting at 0.47%. That's pretty cool. They're working cross-chain, cross-chain liquidity, obviously money market functionality, which is their historic platform, and their Aave Pro, and there's a massive narrative behind it, and hopefully their tokenomics iterate. I sized the position accordingly because historically it hasn't done much. It has like maker overtones with regard to a flawed monetary policy, so I sized it very, very small. Roberto, curve can be staked on L1 only. That's correct. Zachary, are you still holding your dark node? Yes, I am. Love mine, but haven't gotten worried, especially with competitors like AnySwap. Yeah, but that's the thing. They have a moat as a network of VMs. And that's much more than interoperability. That's much more than cross-chain interop. They have a network of computing power. So that's a big deal to me. A moat means everything. They have something that no one else does, and it's critical mass, and it's functional for a long time now. And that's more than enough that I need to keep the position. Lewis, Keeper, any long-term thoughts on this holding of mine? Look at this damn thing. This isn't like a flag. I don't know. It's like a Stargate pattern. I posted that on Twitter. Um, the potential cash flow for this is enormous just because of fixed forex, but then you get the keepers and you got the VE 3x3 tokenomics rework that Andre said is going on. This is just a lovely, lovely position that I'm happy I took when I did. I took it at I took it at like $300, and now it's 5% of my portfolio. Boys and girls, perfect example of a 1% position that's now 5%. That's how you do it. 1% to 10% changes everything. Pretty sure I say that. I've said that before. I've said that before. Daniel, hey, Captain, can you briefly touch upon what's going on with Ohm? Nobody should be looking at Ohm, time, butterfly, what is it, Lobi, whatever the token is. You're wasting your time. You look at the wrapped assets. You look at G-Ohm and W time or whatever the heck they're called. You only can look at the wrapped assets. If you're looking at the rebase assets, stop it. There's nothing meaningful to the rebase asset. You're going to drive yourself nuts. And you can end up selling it because you can't process the depreciation. The assets, the rebase assets, are designed to go down in price. Has nothing to do with the position. So if you're going to look, if you're going to be the type of person that wants one of those positions, you only looked at the wrapped version. One. And two, I don't expect them to appreciate much. If they get 50 to 100% ROI on a yearly basis, I'd be surprised. I expect them to retain value. They're designed to retain value, and it makes sense why and how they can retain value. But if you're looking at 6,000% and think you're going to get it, I don't know what the heck people are thinking. You're going to be lucky to get 50 to 100% ROI on a yearly basis. That's the bottom line. Brews and Views, LQDR was my first 1 to 10. Has been an amazing asset for me. Woo! Yay! My man. Good stuff. Liv W. Daniel sold 11 mil of Ohm last night. Yeah, that guy. It is what it is. But I don't think that makes sense. Directionally, the asset is going in a direction. The Treasury is building. The amount of capital they have to deploy from a VC standpoint is monumental. So I expect the bonds to continue, as I've talked about, because they're a discount. If you could get 5%, 10% in a week, I'd throw around $1 million. If I could get 10 grand a week, 50 grand a week, just for shits and giggles, if you got excess capital, that's a great way to get 5% a week. So that's how capital continuously flows into the Treasury, which keeps the yields up, which means over time, the wrapped version is going to unfuck your brain from how you've been looking at those particular protocols. Stop looking at the rebase assets, people. David, what's up? Random task, shield you hard, my brother. He's awesome. He's awesome. Uh, just the whole team, everything he does with the crew that I talk to, they're just wonderful people. I'm quite surprised and I'm quite humbled that they're interested in what I've had to say for all these months so far, and just very lucky to have been accepted by such a great group of people. Um, this is how I've heard about you months ago. Good dudes. That's right, David. The word of mouth. Anthony, what DeFi plays are you getting into? I don't want to really talk about the small positions. You guys know most of the top portfolio. But the core positions are really what I'm most interested in over time. And the core positions are Curve, um, uh, Spell, Frax, and now Multi was the new core position I took, which clocks in at 16.91% of the portfolio. Killis is in the house. Vlaku, hey Captain, a pleasure as always. I hope I got that right, my man. Colby, any 20% stablecoin yield recommendations? Yeah, MIM on Urine Phantom. Simple as that. Rupert, hey Rupert, how are you? Crypt Guy, Colby, just FYI, USD MEM and Convex gives about 20%. Okay, USD MEM, solid, solid. Or just single-sided MEM on Yarn. Lots of choices. Philosophical question. Ah, piquing my interest. You have a core portfolio position in which you have conviction, a la Curve, inflationary token with deflationary, disinflationary undertones. Do you always accumulate? Not necessarily. Um, you have to watch the portfolio balance because um, you don't want it to be oversized. And the whole point of the asset is to have a revenue stream that you can sell because there's liquidity for you to sell it, and that's the whole point. And focus on the size of the position you want in your portfolio. Make sure it's balanced well with your other core portfolio components. The core of your portfolio needs to be high conviction and overweight, the vast majority of the portfolio. The rest of the portfolio is the moderate conviction, the questionable conviction positions. 1% plays, 2%, 1%, 2%. But the core is like imminent viability, unquestionable, established narrative. What do you got? Curve is the MMT money producer. Spell is the most ridiculous debt system and probably the fastest growing stable in the shortest amount of time, and thus far in the crypto space, MIM rather. And Frax, it controls convex supply. They're the leading holder of convex, which means they control current monetary policy. So they control an MMT money producer. And now multi is one of my core positions because they have by far an immense amount of liquidity, facilitating cross-chain interoperability. And solidly, as Andre's been hinting, will be a new AMM, and MIM is going to facilitate the base pair. So there's connections to Spell and Abracadabra. And how the hell are you going to get cross-chain? If you got to have a cross-chain DEX, uh, if you look at the source code for Solidly, there's references to AnySwap. So AnySwap is going to get the transaction fees from the DEX. And here's an interesting one. Let's take a look at one thing. I'll show you guys. Multi-chain. Let's take a look at this bad boy. If you go over here and you go to Explorer, yeah, and you go to dashboard. So for 1.9 million transactions, there's $19 million in transaction fees. V Multi is going to get the transaction fees because that's what disintermediated systems do. Imagine 1.9 million daily transactions through a DEX, or in 5 years, 20 million daily transactions and $200 million worth of transaction fees. Okay, thus the premise for why my core portfolio was adjusted. It's not even so I avoid speculation, but this is like I'm speculating not about whether it is what it is. I'm speculating on how damn big it's going to grow. So that's the difference. It's like folks speculating on Link deploying cross-chain functionality or being some sort of revenue stream. Great. It's good speculation, but as of right now, the status quo, it is not. It doesn't pay you. You can't capitalize. There's no cash flow. Tokenomics don't really feel awesome saucy. But as of right now, today, there's 20 million, $19 million to be distributed to VE multi holders when the tokenomics are finally deployed, so on and so forth. And dare we say 10x this, we get a sense of how much fees the platform is going to have for the disintermediated owners of the platform, which is the VE multi holders. So I like to speculate based on stuff that is now, stuff that is real, stuff that exists currently, and roll the clock forward to where it's heading. Because I look at the damn directionality of the markets. And when I look at the directionality of the markets, there's only one direction I see, and that's up. Sure, you'll have your short-term dips. Listen, this chart could dip to 280 and still be above the TWAP on the monthly. Hopefully that helps. It's a good question, though. Or say balance between farm and accumulation. I don't have all the answers. That's a subjective question, my friend. So watch the position size. You accumulate if you want a larger position size. But think 5, 10 years down the road. Maybe you don't need the largest position size. Joe took some FTM profits over to AVAX. Are there any cool protocols? I'm not into AVAX right about now. I think the juice is going to be on Phantom. Roberto, I hodl Curve, but ETH fees don't allow me to stake. Staking on Binance for 2% APY is worthwhile. 2% sounds like a massive amount of opportunity cost. Vasco, 1% to 10% changes everything. That's your morning gospel. Now, listen, if someone's coming into the space, they got fresh capital, 10 grand or 100 grand, whatever the heck it is, keep it in stables. Because you have no idea what you're doing. Take 1% bets, but listen to people and learn and figure stuff out, and don't just buy some random shit because you're going to have no idea what the heck it is. You're not going to be able to tell a story. Remember dinner table investing. If someone asks you what to buy, what to get into, if you can't sit down at a dinner table and talk people's ears off about assets and what they are, why they are, what they are, where they're heading, what they're capable of, you don't invest. You need to understand what you're doing, otherwise the sharks are going to take you to town. The fear of the short-term volatility is going to chew you up and spit you out. This is a hostile environment. That's the deal. For someone early in their 30s, do you think it'd be wise to treat DeFi as a retirement strategy instead of 401k IRA? That's what I do, my friend, and I'm 38. Soon, been taking profits and making a mem yearn position on Phantom. I mean, it's cranking out 20% returns. Nice, not much to argue about there. Rook has a lot of news, um, but just as I said, like the link description, great, groovy, and grand to speculate on what's coming. But as of right now, it doesn't generate revenue for you. It's not a cash flow machine. The tokenomics still need to pivot. Sure, they got great roadmaps. It looks beautiful. It looks beautiful. The hiding game is crazy stuff. It's wonderful stuff that they built. But I like to speculate on something that is now and where it's growing to. So they need to pivot first before I would consider taking a position. Hey Noah, what are you doing with multi? Are you staking it? No, it doesn't do anything currently. But Andres laid out the roadmap, and it's like a couple weeks away where VE multi is going to get the transaction fee revenue. And as you can see here, there's $19 million lined up worth of transaction fees. Um, hey Noah, your multi-position buy, hold, or is it possible to produce cash flow? Not right now. Andre, hey Noah, thank you for your philosophy. I managed to save 1% of my portfolio and I grew to 33% total. Thank you for teaching about risk management. Man, hearing a story like that, that makes me happy. God bless you, dude. That's great to hear. And now the next positions, you're going to handle with such experience because you have that experience and you did it right. You were prudent and you were rational. Harvey, question: do you think that we're in a market now where you have to be in the best performing assets would provide you with residual income, even during a bear market unlike 17? Uh, I'm not following entirely, but let me digest. Well, you always have to be in the best performing assets. And residual income is the only thing that means anything. If you don't own assets that pay you, they're going to get sold so hard, you're going to wish you sold them. They're going to get destroyed and pummeled and just hand over fist. Everyone's going to be dumping them. The only reason an asset isn't sold is if there's enough cash flow to pay you to for there to be more of a psychological incentive to want the long-term cash flow over the short-term capital gains. Assets need to pay people. Otherwise, they're going to get sold, and they're going to get sold hard. So if you're not getting a ridiculous revenue stream from your assets, they're going to get sold, guaranteed. And you'll know firsthand what 2017 was like. Uh, Gil Gil Tronk, how do I get my parents to be more into crypto and DeFi? I don't know, but I tell my 6-year-old daughter that paper money is fake and it's not real unless it's on a computer or a cell phone. Um, Tell them to watch my stream. I guess maybe I'm a little intimidating at times, but I'm here to help. I'm here to help. Tapsy, what's up, sir? I know my tweets hurt a lot of people's brains, but I got to get them out because if the tweets are stuck in my brain, they're going to hurt my brain. So I got to get the tweets out such that, you know, clears up space in this cluttered brain of mine. Quantify Daniel and Andre at Frog Radio. Always fun to hear those boys talk serious stuff. I'm going to wrap it up in a minute. Multi is going to give out money. That's right. Let's take a look at the chart real quick. So this is a very interesting chart. This is a really interesting chart. So we had a massive leg up, massive leg up. We're coming off a head and shoulders. There's a bit of a pennant formation. We had a breakout, and this is clearly scavengers or predators taking advantage of the fact that the breakout pushed through the neckline of the head and shoulders, and then was just completely dumped. But we're still within the bounds of the pennant formation. I'm very interested because we have three hits spot on the resistance trend line. And I'm very interested to see if it holds support at, let's say, 2650. Right on support trend line. I got to adjust this trend line a little bit. It needs to be a little higher. But this would be very interesting because then we have three clean hits on resistance, and then we'd have 1, 2, 3 clean hits on support for a relatively ugly bullish pennant formation. Um, it's so this is a decent zone of price action congestion where I drew the horizontal ellipse. It's pushing towards the lower bounds of it now, but it's still not outside of it, given this support right about here at about 2640. So this is my fourth largest position. I don't have any goddamn interest in selling the position. This is my position. I want the cash flow. I want to sell an asset that's going to pay me cash flow. I took the position for a reason. Plus, I bought it at $16, so that's pretty cool. Um, need some shirts, Vince. Who? Me? All right, fine. Maybe I need some shirts. Making me all self-conscious and shit. Rob K, are you planning on staking any of the top 10? Well, I hold multi, so multi-chain is the top TVL uh, protocol on Phantom. And the VE33 drop isn't what you think it is. There's going to be an NFT drop to each of the 20 top TVL protocols, and they're going to potentially sell them on that NFT marketplace. Was it Paint or something? You realize those NFTs are going to go for millions of dollars. Um, I tell you, my 3-year-old paper money is fake too. I tell my he's a big BTC supporter. Yeah. Giltrog, a pleasure. Colby, thanks. No, you're welcome, everybody. It's always fun on Monday, January 17, 12:21 p.m. As always, I thank everyone for joining me. I wish you all a wonderful day. Tell everyone to subscribe. After party on the Discord channel, because that's where it's at nowadays. I caught up with my Ask Vids. I got to do better at that. I will see you again Wednesday. Stay rational, my friends. Peace.